Hi everyone, thank you for watching my channel. This is Perry Trades. If you're new, please remember to like and subscribe. So what you're seeing is market replay. If you watch my previous video, I had explained why I missed $2,200 because the market data on my trading platform had frozen. So I had missed a great opportunity to enter the market when the market was in a uptrend today. So I decided it's not missed opportunities, it's a time to learn. And so what I decided to is download the market replay for today. So if you don't know what market replay is basically downloading the market's data and trading as if you were trading live. So it's not back testing, but you can practice your strategies or any indicators and see how well they work. So in this case, I had missed an opportunity to enter the trade early in the morning. So right now you can see here I have the playback for today's session on March 7th. Right now I'm at right now the market's at 8:29 a.m. So I'm recording this at 7:49 p.m. just to let you know. So what I'm going to do is I'm going to play the market replay, and I'm going to pause it right where my strategy would have set up so I can go ahead and open the position. So earlier today I recorded the video and explained to you why I did not enter the trade even though I had my setup were confirmed. You can see here I have blue, green, and I'm not in a squeeze, and also this line is below this line, and then also the paired pulse is above this line and is sloping up. This double stochastic is above the 90 line, so that's an indication that that I should go in the market, even though other traders use it differently. So in this case, this is not based on my rules. I can't go into the market because even though I'm not in the squeeze, these histogram shows that the trend is weakening. There's cases where the market will go even higher, even though you have these histogram getting smaller. But you know, I'm going to stick to my rule, and so in this case, I decided not to go in. So I did draw these resistance and support levels here because these are area of significance. Usually there are reactions when price get near to these lines right here, these resistance and support lines. So I'm going to go ahead and play the market replay. Right now it's at 100 speed, so I'm going to play it. So you can see here I have an engulfing bar. This is a great ATM strategy that I have right here. Here I can buy high, sell low. Buy high just means that you're setting a buy limit above one tick above the candle. You can set it however how many ticks you want to set it above or below if you're going short. So what else? I can toggle on and off. So if I want to go long, I can go long. If the market, like today, if it's going in an uptrend, then I will keep the short off and keep the long on. I can trade reversal bar, and in this case I'm going to use it for this strategy. I have the engulfing bar feature turned on. So you see here I have this green engulfing bar. Usually when you have this engulfing bar, that's an indication that price is heading higher. Usually you have sellers come in, and you can see here this wick right here. Sellers tried to sell, but then the buyers took control and even drove the price even higher. I did predict it in my video this morning that price would touch this support level actually resistance level here, which is the prior day resistance, prior day high right here. It'd probably respect it and probably pull back, but it did. So let's go ahead and play it. So I'll go ahead and speed it up a little. So I know from this morning, I know the price did break that resistance level and it did pull back. So let me pause it. So of course, if you're a trader or whatever strategy that you have, this would have been a great opportunity if you had an engulfing candle strategy where you go in, how many confirmation bar you set after this bar, whether it's 1 bar or 2 bar confirmation, then you would have made a pretty good, decent profit right here. And then would have to come out, close out your trade right here. So here where it starts pulling back, let me play it. So I do this whenever, not just because I missed a trade today, but also on the weekends. I'll go and trade different days, different conditions in the market, and see where my strategy has set up, and then I'll go ahead and take a trade and see, check to see how well my strategy does. So this is, and even in the evenings after the trading sessions, whenever I have time, I'll go ahead and practice my strategy over and over again. And not, when I test my strategy, I also refine them, whether it's adding another indicator or changing the setting of an indicator. So I find ways to improve it and make it even better. So let me go ahead and continue playing it. So right now you see that price is pulling back. Let me pause it. So right now price have pulled back, and so now it's continuing the uptrend right here. So it is 9:51 a.m. So it's still in a squeeze. It's now in a squeeze now. And so these two trend right here, I strategically set it up this way where this indicator is above this indicator, so that when the two lines converge, so when this line is sloping down and this line is sloping up, that is a good indication that trend is strong. Here, this double stochastic, I've said it many times, traders use it differently. This is overbought, this is oversold. I use it the opposite. When the double stochastic is above the 90 line, then for me that means that is a buy for me. And then when it's below the 10 level, then that is a sell for me. But traders typically use it the opposite. So let me go ahead and continue playing it. Okay, so I've paused it right here. So let's analyze this for a second. So I have an engulfing candle. Engulfing candle, it means it's a green engulfing candle. It means it's a possibility that it's going to go in an uptrend. So usually if you have a strategy, an engulfing candle strategy, then you would enter a trade here. And so I'm out of a squeeze. That condition is correct. That condition has been met. you have this Perry pulse right here that's sloping down, and is below this line right here. This line, Perry trend line right here, it is not quite sloping up, but it is definitely above this line. And you have this double stochastic is above the 90 level. Ideally, I would want it to be above this level, but also be flat. So let's play it some more. Let me reduce the speed a little. So if it was live, I'll tell you exactly where it would be for me the optimal time to get into the trade. Okay, so I paused it right here. So you can see here that I'm still out of the squeeze, and it's sloping down, and this is now sloping up, and here it's starting to flatten out. So this is where I would enter the trade right here. So I'm going to go ahead and do a buy high using my ATM strategy here. So this is what it does. It sets a buy limit here. And so I'm going to go ahead and play it.
Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order submitted.
Okay, I've just entered a trade. Now again, I want to let you know that this is market replay. This is not live. This is market replay because I am practicing my strategy. So here I've entered 2 contracts. My first contract is 100 tick. My second contract, there's no profit. Second contract, using my ATM management right here, the advanced trading management, this will automatically trail the current price. So let me go ahead and play it. So this pink line here is the price line. And
Order filled.
So let me pause it really quickly. So you notice that my first profit target got hit 100 tick right away, and my stop loss moved up to break even +1. So let me show you the so that's $493. That's $6.27 commission. So here I've guaranteed, I've locked in $500 profit. So now I have my second contract, which is going to trail the current price. Usually, when the first contract is hit, usually the price is a few ticks above the break even, which is a good thing. So that way you give it a little bit of room so that it can go even higher. So I'm not sure if price is going to go down and I get stopped out, but we'll see.
Order filled.
Okay, so I just got stopped out right here. So price went down, but normally, but that's fine. So you always want to have a stop loss to protect you in case price go down. But in this case, as you see in the market today, the price did continue going up. So would I go ahead and enter a second trade? Possibly, as long as all my conditions are met. I could have pulled back my stop loss to the super trend level to kind of give it a little bit of room. So perhaps I'll wait for maybe a second engulfing candle to go into the trade, but let's continue playing it. So I'm going to go ahead and speed up the okay, so I paused it. So you can see here, I'm not in a squeeze. This is continually to slope down, and this is kind of flattened out, and this is pointing down. It looks like it's going up again, sloping up. So let's see, where would I go ahead and enter another trade. So let's play it. Let me reduce the speed. Okay, so as you can see here, we have an engulfing candle, so that's a good sign. It is sloping down here, and this is sloping up. So as long as these two are facing each other, and that's a good sign. And definitely, this is definitely above this line, so that's a good indication that it's a good time to go ahead and enter a trade right now. So I'd go in right now and do a buy high, here. And so I'm doing this while it's paused, but in real time, I would, of course, I would go ahead and enter an open position.
Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order filled.
So I got my first take profit. So now if the price continues going up, then it should trail. If not, then I'll get stopped out, but at least I've locked in 100 ticks.
Order filled.
Okay. So let me pause it so you can see here I locked in my first profit target. So here, that's a total of $993. So let me continue. So it appears another green engulfing candle is forming, but we'll see. So it looks like it's pulling back. And of course you see is this double stochastic, it's sloping down, and that means then it's pulling back. So I've gone ahead and speed it up. Notice the stochastic is sloping up. My histogram, it's light blue. That means momentum is weakening. So right now I'm waiting to get into a trade. But normally, when the histogram is weakening, I won't go into a trade. I would prefer to go in when the histogram is blue. But normally that's when it's light blue, that means it's kind of like at the end of its run. I'll just speed it up some more. Okay, so now it pulled back. You can see the stochastic. I really like the stochastic because it really tells you what direction price is going. And you can see here that these two lines are now diverging. They're away from each other. You want them to be pointing to each other, and definitely it's now in a squeeze. So let's continue to play. So right now it's 3:06 in the afternoon. Just to remind you, this is market replay. This is not live. So we're still in the squeeze. It's 3:53, 3:56. So we have 30 more minutes until market close. So at this point, I don't believe if I was trading live, I don't believe I would be going in again for a third trade. So let me play it again. Okay, so now you can see here the downtrend setup is forming. I have the purple shade and the red shade, and I'm not in the squeeze. And this is definitely sloping down, and this is definitely sloping up, and this is below this line right here. Would I go into a trade? Nah, I think this is too early. So I would just continue watching it. Probably not, because it's 30 minutes before market close. I'll probably just call it a day. And you can see here how, where if you would have gone in too early here, it would have, folks that went in here, they would have gotten stopped out quickly right here. So, and you see it went into a squeeze right away. So, yeah, 719. No, I'm sorry, not 719. 421. So market's about to close. 427 and 430. So the closing bell. So yes, so this is basically my strategy, the methodology, the analysis that I put in, how I read the chart, how I read the market, the price direction, looking at my indicators. This is what I do in the evening, and especially on the weekends too. I practice my strategy. I look at setup, see where I can tweak it. And so basically for today, if my computer didn't freeze today, then I would have made, potentially $993. So this is a pretty good trade. My setup showed me where the best time to enter the market, and I exited. Unfortunately, I didn't have my second target. I couldn't trail my second target because I got stopped out in both trades. But sometimes that happens, and sometimes you get those long run. If you get the long run on your second contract, it's even great. So again, I want to thank you for watching my video. Please remember to like and subscribe, and I will see you on the next one. Bye.